Hi, welcome to my video. On this video we're going to be looking at what type of trader are you. Now when we're looking at trading Forex, there are plenty of different ways that you can trade Forex, and there are plenty of different types of personality in people. So what we're trying to do here is we're trying to have a look at different types of personality, different types of trading. We're trying to see what kind of personality suits what kind of trading. The reason for that is that not every way is going to suit every single person. So if you're trading in a way that doesn't suit you, what you may find is that actually that may well lead to losses because you're trying to trade in a way that is incongruent to the way that you are. So you're actually your mental state is actually fighting against your desire to make money. And what this video is about is trying to identify the type of trader that you are, so you can actually bypass and use your personality to the best effect when you trade Forex. Okay, so let's move on to the next thing. Looking at the two main types of trader, what we have is the two main types of trader are manual trader and automated trader. Now, a manual trader is a person who likes to choose their own trading setups, likes to sit in front of the screen and will take the trades, will close the trades, and is fully engaged within the process. An automated trader is somebody who prefers to use a hands-off approach, and this is either trading robots, trading signals, something like that. So it's more of a separate and automated. You're trying to remove yourself from the emotionality of the market. Okay, so let's have a look at the thing. Let's have a look at the two main personality types. What we have here is we have an active person and we have a passive person. And an active person is somebody who likes excitement, somebody who wants to get involved, somebody who can be classed as a type A personality, always wants to make those decisions, doesn't leave the decisions to anyone else. So you've got that kind of type A, forthright, gotta be involved personality. Then we have a more passive personality type, which is where somebody is quite happy for, in this case, a passive person will more likely to use an automated system. So they're quite happy for the rules. The intellectual side is right. They know that this system works. They've tested the system, but they're not interested in watching the trades, putting the trades in themselves. They're just quite happy to do the programming and just to let the systems run. Okay, moving on to the next screen. So here we go. So we're looking at active, which likes the thrill of watching the market, enjoys choosing trading setups and being involved. And an active person can decide their trades through a couple of different ways. One of the ways is technical analysis. Now, technical analysis is also called chart reading. Now, in technical analysis, the idea behind it is that the market creates repeated patterns, and especially the behavior in the market. So what this means is by following some simple and fundamental technical rules, you can look at a chart, you can use these rules to make assumptions of where the market is going to go next. And let me just bring up another screen and I'll show you what I mean. What I've got here is I've got a live, this is a daily chart for the Euro USD daily. I've already put a couple of technical trading indicators on there. The first one we've got here is a trend indicator. So the idea behind that is that with a trend indicator, you're looking to draw a trend, and then you're looking to buy when the market touches the trend indicator. If the market had crossed, you normally would have a stop loss anyway, but the idea is that you'd be looking to sell there and then obviously move in next time it crosses the trend line. And obviously here at the end of the trend, once it breaks through, again you're selling once you've broken through your trend line, but because it didn't cross back up, you would never rebuy into that. You would start a new trend line, or whichever indicator you're using. The second technical indicator I've just put on just for the sake of vary really, is a support and resistance line. So what we're looking at here is that a support and resistance lines are very important in technical trading. The idea behind that is that you get psychological and monetary barriers. So everybody here has sold when the market has come to this point. So anyone who's taken profits will remember that they've taken profits there. Anyone who's made losses also remember these areas. Now the idea behind the support and resistance is that you can get these bounces off these support and resistance lines, but normally once the market has broken through a support and resistance, it tends to revert back. So if it was a support when we're coming up, resistance when we're coming up, it ends up being support when the market is above it. And as you can see here, the same trend line that was difficult to break through has suddenly become support when the market has moved up. So that's an idea of using a support and resistance. In this case, you are looking to either sell when the market touched, believing that it's not going to break through, or you're looking to, once it has broken through, you're looking to then buy whenever the market retouches your support line. So as you can see, it's nice and simple way of being able to identify trades. Okay, so we're now looking at another axis of fundamental analysis. Fundamental analysis is big picture. So we're looking at bond rates, and let's just move in. So I've got some more information here. So what we've got here, so we'll go back to technical analysis. We've got chart reading, repeating patterns, support and resistance trend lines, mechanical indicators. Mechanical indicators are things like RSI indicators and other things that you'll find on your charting package, which it basically takes and gives you an indication of when to trade. So we've covered most of technical analysis in the previous page. So let's scroll down on to fundamental analysis. Now fundamental analysis is things like economics, demographics, interest rates, government policy. So as you can see, it's more of an overview of the way that currencies move. So in this case, what you could be looking for is you could be looking for unemployment rates, how that affects the economy. You could be looking at interest rate decisions from central banks. So in this case, you could be looking at the Japanese central bank. They've been having a virtual zero interest rate policy since for the last 15 to 20 years. So say, for example, they move theirs up to 1%, all of a sudden that will have a massive effect on other currencies that trade against it. So as you can see, these different kind of things that governments do can actually affect how the currency markets trade, which is why we've kind of got government policy there at the bottom. And let me bring up, this is IG. This is a spread betting format, but I just kind of wanted to show you the analysis really, because theirs is quite good. On a note on analysis and information, I am putting Forex TV onto the site. It's one of my to-do projects. If, however, you're watching this video and it's already on, then obviously I've done it. But what we're looking at is just Forex information really. So, and here IG has a good thing where what they do is they do a lot of articles on Forex. So there you go, helped by growth figures. So as you can see, what they're doing is they're writing a nice little article about why they think sterling is going to keep increasing, because obviously the British economy is getting better. And again, this is kind of like fundamental information, and again they're saying how the French is affecting the euro. So you can see how by looking at and doing a little bit of research, you can find out the general direction that you believe the market to go, and then you can make your trades based on this information. And that's the fundamental analysis. And as you can see, they've got quite a lot of detailed information here, and we'll be putting that information on the site soon. So right, okay. Next bit, we're looking at passive. We're going back to the idea of passive and active traders. Passive prefer an automated trading system. It could be someone who likes to trade manually. However, they would set it up in a way that they would set a take profit point, they would set a stop loss. So they've made a manual decision to where to enter a trade, but they're allowing their computer to do it, because you can put orders into most software packages where you can say, I want to buy if it hits this point, I want a stop loss, or I want a trailing stop, and I'm going to take my money out when it hits this point. So as you can see, you can actually almost program, even if you're a manual trader, you can kind of program how you want it to be. A passive person likes to remove the emotions and the potential mistakes of active trading. Now, if you cannot get on with manual trading, I'm more of a passive trader. I prefer automated trading myself. That's where I kind of specialize in. And what I found when I was right at the beginning of my learning, I tried everything. I tried manual trading, I tried automated trading, and over time I kind of realized that I was making a lot of mistakes when I was manual trading, just because the movements of the market, it had a dramatic effect. I would close trades short because I had a fear of losing the money, because the money can, as the market ticks, the money's quite hypnotic. You can watch it go up, and one of the worst things you can do is not let your winners run, and I would just ended up not being very successful. And one of the things I discovered, that once I'd switched to automated trading and taught myself how to optimize my robots properly and everything else, then I've not looked back. But again, it's just the idea that choosing the right way for you is essential. Passive people use expert advisors, they use signal providers. So again, we're just looking at automated ways. I mean, again, I could, if I wanted to, identify my trading setups. I could quite happily program the computer to enter into it, because again, I'm not looking to watch my trades, which is where my problems arise. I'm just looking to make the trades how I've designed my systems to run. Okay, so what you need for automated trading, if you're trading manually, what you need is an integration, a forex broker, a way of using making trades and have it connected to the forex market, and that's done through a forex broker. If you're doing automated trading, however, you would need a couple of bits of more of your stuff. The first one is a virtual private server. Now, the reason we have one of those is because you can't really run, not if you're going to do it properly, you can't really run your systems on your laptops or desktops or your systems at home. You have to have them on 24 hours a day. If for some reason you have a power cut, or your fuse goes, or just any little thing, computer crashing, which does happen from time to time, then any trades that are either open, that should be closed, or needed to be open, and it can lose you a lot of money. So having a virtual private server means that they have a 99.9% uptime. You get very, very fast rates, because they're designed for, especially the system that I would recommend is designed specifically with traders in mind, so that makes sure that the latency rates, the slippage rates are really, really low. So and if you watch some of the videos on the main site, you'll be able to see how you can find out your slippage rates and things with virtual private servers. Another option that people that can look at if you want to do automated trading, or you feel that that's the right way for you to go, is you can follow signal providers. I've got a whole section on the site about signal providers, about the free Zulu Trade platform. What I've found is that a lot of other signal providers I find tend to want to charge a monthly fee. Now, obviously, as there's no guarantees that you do not whether or not you're going to make any money with the signal providers. Some are really good, but because there's a lot of noise in there, if you're paying for a signal provider, then you need to make that money every month before you're even into a profit. So if somebody's wanting $200 a month, you need a hell of a big account just to kind of cover their cost, let alone make any money. So and I find that you can find some really good signal providers on Zulu Trade. I mean, obviously you have to be a little bit careful. Just use the ones that are near the top, really, and you can do your own analysis, and you'll be able to work out which ones are which. Okay, this is coming to the end of the presentation. So hopefully we can see that if you're an A1, type A personality, you like excitement, you like being in the trade, you like making all the decisions, then you looking towards maybe manual trading is the way forward for you. If you feel that your emotions are getting in the way, that it's causing you to make bad decisions and lose money, then maybe you want to think about maybe removing yourself from the equation, in which case then automated systems and signal providers may be the best way for you to go. I'm not saying that mutually exclusive. Try always, by all means, and you'll find the way that suits you, but this is just a kind of just a little guide, really, to kind of help you find the way that you are. Below this video, I'm going to put a few links in. I'll put in a link to the VPS if you're going to do any automated service. I'll also put in a link to Zulu Trade if you want to have a look at some free signal providers. I'll also put in a link, I haven't written on there, but I'll put a link in for some broker information, or you can have a look at the broker part on the site if you wish to. So I hope you've enjoyed the video. Next time we're going to be looking at the 5 pitfalls for that help people stop them losing money. They're kind of fundamentals. We're not looking at trading techniques. We'll be looking at that in future videos. What we're really going to be concentrating on is fundamentals for this first couple, and this is trying to get your structure right. And the 5 pitfalls video comes with a free ebook that I've kind of written as a complementary to the video. So in that you'll be looking at what fundamental setups of not making mistakes and improving your profitability. So until next time, I'll speak to you soon.